Hey guys, what's going on? It's Billy here from the best place to buy gold online. I hope you're having a fantastic day. So, it is the 26th of April 2016, and I have just come across a article, and it is titled "Bank of England says investors may need to accept lower bank profits." London investors have not fully priced in the likelihood that banks will generate lower returns than in the past as they shift to less risky business models. A deputy governor of the Bank of England said on Tuesday, major global banks as Citi and Goldman Sachs have reported sharp falls in profits in their latest earnings, and some British ones, such as the Royal Bank of Scotland, are in the midst of large-scale job cuts. Jon Cunliffe, who is responsible for financial stability of the Bank of England, said banks probably had more restructuring to do, especially in the underperforming investment banking divisions, but that investors needed to lower their expectations too. There is clearly at present a wide gap between banks' disappointing returns on the one side and investors' expectations on the other, Cunliffe said in a speech in London. Investors had the most pessimistic outlook on banks' ability to increase the value of their assets since 2011 to 2012 Eurozone crisis, he said, even though they were not so concerned about banks' resilience as they were then. Institutional investors who owned bank shares need to accept that the types of returns of around 15% a year on equity that banks achieved before the financial crisis were no longer achievable. Global interest rates had fallen, and regulators did not allow banks to take the same risks as before, he said. Targets now stand at around 11.5%, but Cunliffe said this may still reflect factors that are still inflating required returns beyond the levels merited by risk. One possible reason was that asset managers for institutions and fixed liabilities such as pension funds were under pressure to continue to generate high returns even after a big fall in interest rates. Another was that some fund managers might also favour risky shares because the upside of them of outperforming rival funds was greater than the downside of underperforming, he added. Regulators also needed to be clear that they were not seeking further significant tightening of capital requirements. British banks' returns on retail lending stood at around 10% a year once the costs of past misconduct were taken into account, while business lending generated returns of 8 to 9%, roughly in line with capital costs, Cunliffe said, but their investment banking arms only generated 5%, suggesting parts were not economically profitable and in need of trimming. Bank staff costs have not fallen anywhere near as much as shareholder returns. So there you have it, guys. I think the we're in for a little bit more of this. Obviously, it came out a few weeks ago that obviously Goldman Sachs reported earnings were down. Citibank's returning earnings were down. Now the Bank of England are coming out and saying obviously that the UK investment arms, their earnings are obviously down. Their profits are going to be down, and investors likely to receive lower returns. If this isn't a hint that we are on continued decline and probably on the verge of a recession, I don't know what is. Obviously Reuters over here are actually reporting similar. Obviously there's hundreds and hundreds of articles. Just thought I'd share this quickly. And this came after watching this video from Mike Maloney. I highly recommend you go check it out. It's link below. He's got some interesting data there with regards to industrial production index, rail freight, and manufacturing sales. And these charts, they're all come from the Federal Reserve of America. And if you live in the UK, I'm sure you can pick them up on the Bank of England website. I just haven't bothered looking at it yet. But it's really shocking and alarming data that shows that we are in a recession. although they're not likely going to admit it outright, but they are hinting with articles like this being released by the mainstream media. So there you have it. I will leave this link to this video in the description below. Feel free to share your thoughts. But again, more news coming out that the banks aren't actually performing as well as they say they are. A lot of lies, a lot of data misconception. Just some more reasons to actually own gold and actually protect your wealth from this next coming crisis. So if you haven't done so already, go ahead and check out my website. It's goldfinancial.de. Go ahead and register yourself for a free account, and I'll see you in the next video. Take care. Bye bye.